Hey, welcome back to the show. And joining us today is returning guest Michael Pento, who serves as the president and founder of Pento Portfolio Strategies. Michael, how you been? It's been a while since I've had you back on the show.
Well, it's always good to see you, Christian.
A lot of crazy stuff going on out there, markets, geopolitically, even the state of society for that matter. Perhaps you could begin by situating us with your latest thoughts as it relates to what you're seeing out there, financial markets, et cetera.
Well, I have a five-sector model that ranges between rapid deflation, disinflation or deflation and hyperinflation. We've been in sector 3, which is kind of like a stasis on the second derivative of inflation and growth. Of course, the events of last few days have kind of upset the apple cart. So we just initially have a kind of like a stagflation fear, but I don't think it lasts long. I've been doing this 35 years, so I don't think the war in the Middle East is an existential threat to mankind. They'll find a way around it. Oil prices may remain elevated for a while. They should. But that doesn't mean that we don't have a triumvirate of bubbles here. We still have a massive real estate bubble, credit bubble, and an equity bubble. And bubbles don't remain afloat forever. It will pop. The credit market's going to pop this one. That's what I believe. This usually happens. And when it does, it's going to be devastating. Just as an example, so I can illustrate my point, we had a war with Iran. Oil prices jumped about 7%, and that caused some of the bubbles to crack. So, for instance, Korea was a very over-leveraged, bubblicious economy and dropped 20%. Their market dropped 20%. Silver dropped 12% in a day after dropping a lot more than that just a few weeks prior. So a lot of tech stocks in the United States dropped over 10% in the last few days. So that's just the nature of bubbles. Bubbles are, it's like, I call it the hemophiliac market, where you just get any kind of when the market cap of GDP is 230% and you're this over leveraged, any kind of bump or bruise causes extensive damage, extensive bleeding. It's hard to stop it. So that's what we've seen the last few days. But I think they put a tourniquet on this one. They bandaged it up. But again, just to be clear, this is not going to last forever. Bubbles do not float and grow forever. They pop. And it'll be extremely dangerous time where you see what happened this week is going to happen for, maybe a few months before the carnage runs its course. And, you could be down 50%, 80% in your investments. And if you're not paying attention to your portfolio, it could lead to an existential crisis for your retirement.
As it relates to various other things that you are tracking and monitoring, could you share or unpack other things that are perhaps not receiving enough attention, Michael?
Things that aren't receiving enough attention, I would say,
Yeah.
First and foremost, and it is getting some degree of attention, at least on the media outlets that I look at. It's the credit crisis, the credit bubble we're looking at. The bubble in private credit, to me, which is about almost a $2 trillion market now, which really didn't even exist a few years ago. That's the epicenter, the nucleus of the credit bubble. But if you look at in aggregate, total non-financial debt as a percentage of GDP is as high as today as it was prior to the global financial crisis. And that's just not in nominal terms it's through the roof, but as a percentage of GDP as I look at things, and it's a phony GDP because it's been boosted up by all this money printing. I mean, we have a Federal Reserve that printed $4.5 trillion since Jerome Powell took office. $4.5 trillion of high-powered money. That was unfathomable just a few decades ago. This country would ever do anything like that. And as a matter of fact, Mr. Powell, who Trump hates because he's not lowering interest rates fast enough, is the biggest money printer the world, the United States, I don't use hyperbole, the biggest money printer by far the United States has ever seen. In fact, he printed $80 billion in the past 3 months. $80 billion of Fed credit, high-powered money. And, what's the reason? Is the reason that inflation is really such a low number that we need to get it going again? No, you've missed your inflation target for 5 freaking years to the north. You've gone to the upside of this average price. The average of 2% inflation is their goal, their target. That means you can go below it for a little while, and then you can go above it for a little while, but you should be around 2%, right? Well, if you've been above 2% for 5 years, why in God's good earth would you even think about printing $80 billion since they stopped quantitative tightening? That doesn't make any sense to me, Christian. And it doesn't make, who it doesn't make even more sense to? Because I think I'm in the upper, top 1% of earners. For the 80% of Americans who are the middle class eviscerated by this inflation that we've seen post-COVID, you can barely go to the grocery store and survive, and you're still adding 3% per year to that unaffordable level of prices. And please don't tell me incomes are keeping up, because incomes for some Americans are keeping up, but are incomes of retired Americans keeping up? Are incomes of underemployed and unemployed Americans keeping up? So you have a great swath of this nation that cannot keep up with inflation because they're either retired or underemployed. So so incomes are not keeping up, and you've hurt the middle class, and prices are still rising, and yet we have a Fed that's hell bent on. We're replacing Powell with Warsh, who I actually like, but he's supposed to be there to lower interest rates even more, to get inflation going even higher. Come on, it's ridiculous.
Yeah, as I have gone out and about and traveled, Michael, I do see. I feel like I see more and more people, living on the edge, and people are obviously hurting. I'm sure you saw the article. A lot of Americans selling their plasma, people going to other means, side hustles, side gigs, certain platforms where people are exposing themselves to bring in revenue. So that's has me thinking of these fourth turning times. It sounds so cliche that you hear so much about.
Yeah, well, I mean, the people who are accessing food banks are, at the record high in this country, and it makes sense because of they said that inflation was rising around 9% post-COVID, but was really rising close to 20% post-COVID. Nobody's incomes were going up 20% after COVID or any time in this nation's history. So it's the level of prices that's the problem. It's a genuine affordability crisis, and it's not getting better. It's if you have any inflation at all, it's getting worse. Some people like to say, well, inflation's plummeting. Well, the rate of change is plummeting from 9%, but really was 20. The way they measure it when it was 9, now the way they measure it, government, it's 3, but 3 is not 0. And in reality, 3 is probably closer to 6 or 7. And its prices are rising from an unaffordable level. That's the truth. And that's what's really hurting. That's what makes this country's economic foundation even more stable. I call it, it's a foundation built on silly sand. It's built by debt and asset bubbles and by the over financialization of the economy. And we're supposed to bring in somebody who's going to lower interest rates, and maybe we get him appointed in June from the Senate, Kevin Warsh. Maybe we don't, because remember, Trump has to remove his lawsuit from the Fed, or there will be no vote on his replacement.
I'd also thought I'd mention, and I presume you came across it as well. I think it was the CEO of one of the banks, if I'm not mistaken, posted something about cyber attacks, potential cyber attacks that we're hearing as it relates to the conflict over in Iran. And I don't know if you have any commentary on what kind of response that might be if that occurs, and people's access to their money is obviously negated, so to speak. I mean, just other things that you could provide color. I mean, I know obviously you're not a geopolitical expert, but other things that people should be monitoring where there could be some type of bail-in or something to that effect.
Well, I can tell you this. I'm a libertarian. I'm an isolationist. I mean, I can make a cogent argument as to why we could have we could and should have bombed the leadership of Iran. We don't have a problem with the Iranian people, but you take out their leadership and you get rid of them, and it should be a 24-hour operation. I heard this morning that we're just getting started with this operation. I mean, you just tell the Iranian leaders, you slaughter your citizens, you threaten the existential existence of Israel and America, you pursue a bomb, and we'll take out your leadership. So you behave like a human being. You're not a Neanderthal. Otherwise, we'll remove you. And that's fine. And that we should be in and out. If you could probably convince me that we should do that as an isolationist. But these protracted wars were interventions in Venezuela and threatening Canada and Greenland, imposing tariffs. No one can make an argument that the tariff level has been a clear and concise and cogent implementation. If you want to go the tariff route, I wouldn't have gone the tariff route. I would just have made deals where they have to buy a commensurate amount of goods to balance the trade. So in the case of China, if we have a balance of a deficit with China, we're importing too many of their toys, and they have to buy more of our soybeans. Some kind of deal like that. But you can't say, we went from Liberation Day on April 2nd of last year, then that was not done away with in a week, and then we went to 10%, then it's 15%, and we have this deal and that deal. You can't run a country like that. So cyber attacks here, they happen. There's protection. Israel was the one who conducted the cyber attack in Iran. I'm not really that concerned about a cyber attack because there's only a certain number of things you could do. I do start with 5% physical gold in your possession, because that's a real store of wealth. And you can, I wouldn't just keep bricks around. You could 1 ounce bars or, $5,000. So you can go a long way there, or even smaller. Here's the thing. We need to have a country here that embraces low taxes, low interest rates, stable currency, low inflation, and freedom for its people. I don't think we have that right now.
Yeah, I sense that things are going to continue to get hairier, Michael. The more and more that I see, just tangentially, not that we need to focus on politics, but I'll just mention, it obviously ties in. I've just noticed more and more fractionalization go on between different groups, different parties. People that once agreed on one thing has now swayed, and so it's been interesting to see that process evolve. Also wanted to ask you, in light of time, you obviously have an extensive Rolodex. You have a lot of contacts, clients. If you're able to, could you share any interesting insights regarding these conversations and interactions with other people, whether investors, family offices, et cetera, that you find would be accretive to our dialogue?
Well, I just want to comment on what you said before. When I was growing up as a kid, I'm 62 years old. The idea when you have a State of the Union address, it was a much more cohesive event where, yes, there were differences between the parties, but it was a much more congenial environment. Now you have people screaming at each other and people getting escorted out with signs. It's becoming a very, disjointed and incendiary environment in DC. There's no one is really where are the people in charge that are espousing balanced budgets anymore? We're supposedly taking in trillions of dollars in revenue, but the trade deficit is pretty much the same for 2025 as 2024. It was almost virtually the same, the dollar amount, the trade deficit, and the national deficit was about $2 trillion, 1.9 trillion dollars. So it's about the same as well. So all this talk about revenue and prosperity and the greatest economy the world has ever seen, it's just BS. It's just not true. And I'm a libertarian again. I'm not a Democrat and I'm not a Republican. I'm just trying to honestly look at the data, and there is no improvement. But we can always hope and pray for the best. And as an investor, you have to look at that second derivative of inflation in the context of growth, so you know what commodities, what currencies, what equities, what bonds, what part of the yield curve, how do you want to invest? Because buy and hold strategy of a 60-40 portfolio, I mean, when bonds and stocks are in a bubble, just look at what happened in 2022. I mean, you lost about 22% in stocks, and you got murdered by about 40 or 50% if you were in bonds. U.S. bonds. I'm not talking about junk bonds. I'm talking about U.S. Treasuries. That's what happens when both things are in a bubble, and they are. So your buy and hold 60-40 portfolio is not going to help you. So stay alert, stay tuned, and actively manage your portfolio around these changes in inflation and growth.
Absolutely. And as it relates to your portfolio positioning, could you perhaps shed any color or any light on any suggestions that you have for people? Obviously, people can check out your website.
Well, it was working very well until Monday. we had a nice solid gain for the year. We had precious metals, which everything goes into a correlation of one when the poop hits the bed, So precious metals were doing very well. Our foreign stocks were doing very well. Our defense stocks were doing very well. Our bond allocation was doing very well. Everything was doing well. But like I said, you have these turbulent, unpredictable times. There isn't a model alive that can predict the president that we have, who I voted for twice, by the way, so don't send me any emails. But he changes his mind. I mean, who knows? The market gets yippy and all tariffs are off. The oil prices get yippy, and maybe he makes a deal with whoever's pretends to be in charge of Iran. I don't know. All I know is that as of right now, out of this recording, which is on Wednesday morning, the financial conditions have stopped easing and credit spreads have stopped tightening, which leads me to be cautious, but doesn't have me yet selling longs and taking on more hedges in the portfolio. I had hedges in the portfolio as well, interest rate hedges. I had one small, I had a tail risk position, still have it. But I wouldn't be looking to increase them unless my model tells me it's appropriate to do so. And I'm not going to be able to know that until the model is a predictive a mechanism. So it will let me know before there's major carnage done to equity prices. But of course, if you just listen to the mainstream financial media, they're going to tell you nothing can be predicted. You can't predict markets. Just buy and hold, and the market always comes back. Well, none of that is true. I can tell you my model will absolutely tell you when a recession is coming. It will absolutely tell you when we're having a problem in the credit markets, and I will take preemptive measures. Before you hear about somebody tell you, "Oh, I'm always long," CMBS, I'm always long. I'm always long. Well, good. I'm glad you're always long. If you're always long, then why not just buy SPY, which is the ETF for the S&P 500, and just go to bed? And because that'll outperform you 80% of the time, but you'll have all that volatility. And as I said, when the bubble is this big, the S&P tends to drop 50%. So you have to have a model that can participate in the upside, but also is able to identify when to get out of harm's way, to sprint for that very narrow emergency exit door, which is exactly what I intend to do.
No doubt. Yeah, it's I'm just thinking of all the different things to cover here again in light of time. You also mentioned about foreign opportunities, foreign markets, stocks, et cetera. Could you unpack that a bit for us?
Yeah, I mean, I have a pretty large position in India. It's the fastest growing economy on the planet. It hasn't really done much for the past year. Most of it was suffering through. Most of the damage was done because of the tariffs. Well, the tariffs have pretty much been on the back burner now. It's no longer 50% for India. It's probably 15% for India. That's the way it stands now. And of course, India imports a lot of energy, so the higher oil prices don't help it. But I don't think that either of those conditions will last forever. In fact, I anticipate they'll change very soon, and that's why I'm in India. I also have some international dividend stocks too. To be someone who's sequestered into the Mag 7 and think you have any semblance of safety is just a fantasy. So when you're in Sector 3, you need a broad, diversified domestic and international investment spectrum, and that's exactly what we have. I'm also on the shorter end of the bond curve because I think that even though I don't think interest rates are going to fall much, I don't think they're going to be increased either. So you have some stability there in the short end of the yield curve. And I'm short the long end of the yield curve because I don't see any room for upside in bond prices out on the long end of the yield curve. So very little chance of lower yields outside of a recession. And even if we have a recession, Christian, the annual deficit is going to go to around $5 trillion. So maybe you have this kind of reflexive knee jerk move into the long end of the bond market, but how long does that last? Because there's just too much debt to be issued. That means the Fed's going to come and monetize it all, as I'm sure be happy to do with alacrity as they've done in the past. And then we're going to have some kind of stagflation, which is not good for the long end of the bond market.
Absolutely. Michael, is there anything else that you'd like to share? And then also, how can people learn more about you as well as get in touch with you?
Well, the website is pentoports, PORT.com. And on that, I have a midweek reality check, which I'm actually working on today. And I publish that out. It gives you my view of what's going on, unbiased view. I don't have a sales force telling me what to sell, and no one's telling me I can't. You can't raise cash because that's a violation. So I just do whatever's best for my clients, for me and my clients, my money and my clients' money. And I give you a 36,000 foot view of what I'm thinking about of the data and the markets. And if you're a U.S. citizen and you have $100,000 to invest and you're interested in a long short strategy, which participates in bull markets, but also tries to protect and profit from bear markets, then I'll manage your money directly in the inflation, deflation, and economic cycle model. You have to be a U.S. citizen, have at least $100,000 to invest, and you have to be qualified for that kind of portfolio.
Noted. Well, Michael, I appreciate you sharing your thoughts. Be well in light of these interesting times that we're in, and looking forward to reconnecting with you before long.
Thanks, Christian. Always a pleasure.
Thanks for tuning in. And if you enjoyed the show, I encourage you to like, share, and follow if you found value in it. And I always look forward to hearing your feedback and thoughts. And until next time, take care and be well.